The latest job numbers are in. Initial claims hit 235,000 and continuing claims are climbing. Some might see that as a warning. There is a bigger picture here. America's economy is still showing resilience and strength under President Trump. Tax cuts, deregulation, and a bold energy agenda are keeping Main Street moving. AI and innovation are boosting productivity and creating new opportunities for hard-working Americans. Meanwhile, the stock market is holding strong, powered by a handful of tech giants riding the AI boom. Joining me now to break it all down is Dale Smothers, President and CEO of RDS Wealth Management. Dale, welcome back. How concerned should we be about unemployment ticking up?
Yeah, unemployment ticking up is definitely a concern that we need to be watching, but a lot of this can be kind of put to rest if the Fed comes out with a rate cut. I think that a rate cut will maybe start to give us a little bit of tailwind in the market that's already kind of priced into the market, and it very easily could give us a little bit of optimism in the labor market as well. It's this fancy word of bifurcation because just as you mentioned, the labor market has kind of been torn into two separate parts. There's the part of the labor market that shows a hard market to get a job in right now, a little bit harder than it may have been just a year or so ago. And then there's this part of the labor market that says that American workers are more productive than they've ever been. And a lot of that has to do with the AI innovations and the way that our businesses are using that AI, as you just mentioned, Alicia.
Yeah, you talked about that, the split. We're seeing this split. There's some pressure on the labor market, but overall optimism in American enterprise. Why is that?
Mm-hmm. Yeah, that's just the overall optimism of what America is going to be under the current administration, Alicia. Mm-hmm. I've said it. I've been waving this flag essentially for the last year. Every time we get together, I'm telling you that you want to be a part of this American economy. At the end of the day, the numbers, the labor market do say something about where we are in the cycle, but it is a cycle. And the hope is that our low part of the cycle is not devastating. And I don't think it will be because of all the optimism. You mentioned deregulation, the tax cut that was recently passed. If that hadn't have been passed, the blue-collar worker would have been in trouble. But I can tell you that this administration currently is laser-focused on that blue-collar worker and trying their best to make that everything that America has been known for. The American dream is still alive, and that's where the optimism comes from.
Absolutely. And with AI boosting productivity, but, changing the market, what does this mean for everyday workers under Trump's economic policies? I mean, the market's optimism. Is the market optimism what we're seeing now? Is that justified? Or are we in a tech bubble, like I've heard some say?
Such a good question. And the thing is, again, if you want to talk about this word and the splitting of two parts, the market is telling us that it wants to go higher, but it's being led up specifically by essentially the top 10 stocks that perform well in the S&P 500. The other 490 stocks, Alicia, have not actually done a lot since the April lows. This 30% bid up that we've seen since April lows have been led by AI and technology companies. Technology companies are not bad at all. These companies are incredible, and they're going to lead us into the future of AI. But the valuation of those stocks is likely overdone just a little bit. So an investor that has their 401k right now and they're seeing these 401ks at record highs, now is the time, especially, Alicia, especially if you are close enough to retirement that you don't have time to make it back again. Now is the time to rebalance that portfolio and make sure that whatever is under the hood of your 401k is ready to weather the road ahead. One other point I'll give an investor if they're watching is that this is what we call financial winter. When we enter into August, September, and October, if I were the weatherman on this station, I'd be telling you we're in winter. Make sure you've got your coats out. September specifically, historically, is down 56% of the time since we've been measuring the S&P 500. So if we see some pullback, don't panic. Stick to the plan and continue on your long-term investment philosophy.
It's all about the long term, right? Being smart to plan for your future. We don't do it enough. Dale Smothers, President and CEO of RDS Wealth Management. Appreciate your time. Great insight today, as always.
Good to be with you, Alicia.
Likewise.